my dance, make it hurt.
Hey guys, welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. It's Education Wednesday, and I wanted to come speak to you guys and let's have a discussion about commercial real estate, right? Today I wanted to talk about a little bit of the retail industry, right? Retail commercial real estate. For those that pay attention, you read the headlines, retailers going away and, everything's going to be online and, there's no need for it. I think a lot of times when you read the headlines, there's certain trends in retail that get lumped together. You got to kind of dig deeper into that information. Granted, yes, retail is changing. Retail is one of those industries that's always changing, because it's about the consumer, it's about the end buyer, and our habits change, things that we like change. But I always pose the question, if you look at it in its totality, what do you do as a consumer? Do you buy stuff online? Do you go to the store? Do you go out to eat? Restaurants is included into that. There's other sectors in retail. For instance, one thing that's, if you pay attention, or maybe you will start paying attention, that's been on a tear here recently, is a lot of your automotive retailers and automotive service retailers are expanding. So you'll probably notice here there's a lot of lube stations popping up here, Quick Fives, Jiffy Lubes popping up here, providing service. So part of the service part of retail is expanding. I know that with the pandemic, a lot of your restaurants were closing. Some of them are probably not coming back. But also there's opportunity for those that have strong balance sheets, brands, systems, and obviously capital are taking advantage of these opportunities. So they're starting to expand. So what they realized is, during the pandemic, how to, adjust their business on the fly, do a little bit curbside delivery. There's still portions of, in dining, some, that were, more QSR, which is basically quick service restaurants. What they decided to do, especially, and this was kind of a trend that was going on anyway, they decided to, take less square footage and get smaller on that, because even prior to the pandemic, the game is units. So how many units can we get, whether it's a franchise or corporate owned? And so land is scarce. That's just one commodity that's not growing, right? Land is one of those finite things. So typically your QSRs, we're looking for about an acre pad site or acre of land to build their buildings on, or have it developed and leased back, or whatever the case may be. But nonetheless, sites like that are hard to come by, especially if you're looking in the areas that meet their criteria, which are going to be areas with certain medium incomes, high vehicles per day on main to main or thoroughfares. And so what they've been doing here lately, especially with the price of land and the cost of construction, they've been downsizing their square footage. And then also they've been creating new concepts of buildings to where they can go on, instead of a 1 acre lot, Now they can do close to 3/4 to almost a half an acre. So that gives them more opportunity to continue to expand, to continue to add units, and to continue to serve in areas that an acre of land is just hard to come by. So for all intents and purposes, restaurants are expanding. I mean, if you drive by daily, in certain locations that you're around, whatever market you're in, I mean, you'll see people still dining in with the mask on, with their mask on or mask required. One thing I think that I don't think it's gonna change is just human nature. We're just social animals, right? We're social creatures, and there's an experience that comes with retail. So people are still going to the malls, and they're still going to shop at the retail strip centers. You'll pop into your neighborhood retail strip center. You'll go to your power centers to entertain yourself, dine and eat. I do think theaters will come back. I mean, they're gonna have to consolidate, and some locations I think that didn't make sense, they're gonna close. But the experience you get with enjoying a movie versus being at home is different, right? It's a whole group experience. So I think that's going to come back, and there's going to be opportunity there. So with all that being said, um, there's opportunity from an investment standpoint of owning real estate and owning these commercial retail properties. Because one thing I do know, and when it comes to capital right now, there's plenty of it. Everybody's searching for yield. I don't know if you guys were paying attention to the news, but you got these pension funds. They're out there pushing, trying to meet the needs of the constituents, which are the workers. And most of these pension funds need at least a 7% cash on cash return roughly, in order to maintain. So with multifamily still kind of being the bread and butter industrial, with so many dollars chasing so few opportunities, that's pushing cap rates down, right? So you're getting cap rates into the 4 and 5%. That's very hard to turn, to provide any returns to your base. So what ends up happening is they're going to start chasing yield again, and where now the stuff that's out of favor that's being hammered in the news is retail, and retail is offering those type of yields. So you'll start to see them come back. You got to pay attention, obviously, the trends, as I always preach. Look at the news, do your research, do your due diligence, and just pay attention to what's going on. Like I said, investing is not necessarily complicated. You just gotta really pay attention and do your due diligence. Like I said, you still people see you out there eating. You yourself, people that still go out and shop. They're still going out to dine. They may want to go see a movie. And yes, of course, there is going to be an online portion to it, because it offers convenience, selection. But from a retail standpoint, the push for curbside pickup is big, and so I think that there's opportunity there. Now, for me personally, like when I was talking about automotive, so I'm talking about your O'Reillys, your Jiffy Lubes, and stuff like that. It's just one of those things that there's always going to be a need for maintenance. When you buy a car, cars ain't going nowhere. They're going to probably all be electric at some point. But there's going to be a maintenance required. There's going to be tires that need to be put on, rotated, fluids that need to be changed as we progress. If you're thinking 5 years from now, it's going to take time before everything becomes fully electric, if that's the continued path, which it seems like it's heading. And then just parts and stuff like that. So those things, I think, for the near term, which I say was probably 5-10 years, are going to be available, as long as you get prime real estate locations, and you understand what the options is when you buy into these particular properties, to own for cash flow, and then later on, whenever the tenant leaves, what it can be repurposed to. And then also, like I said before, with the restaurant opportunities, get a strong brand, strong franchisee, or corporate guaranteed location or provider, and then just ride it out. Because even Starbucks is still churning out dollars, and in their locations they're paying rent, although they were trying to force themselves not to pay rent to their landlords. But nonetheless, at the end of the day, they want to make money, so they're going to, they paid rent. So just some tidbits there. Want to bring to you, have a discussion. There's opportunities at retail. We're going to continue this conversation. As always, like, subscribe, share, leave a comment, and let's continue to talk about commercial real estate investing, so we put our money to work and fund the things that we want to fund with the returns that we get. And as always, you can go fast, or we can go further. So let's do it together. Happy invested. Until next time.